Have you ever wondered what Tesla's plans are for next year? Tesla CEO Elon Musk has a lot of plans for the company, both in the short and long term. Tesla is known for their never-ending innovative ideas and projects. Make sure to stay tuned and keep watching to know more about this. Even though Tesla is undoubtedly losing quite a number of fans due to its leader being controversial, a lot more others believe in the company and its future potential. And Tesla being Tesla, they don't disappoint. With all the projects and products lined up, their phones are ringing off the hook for reservations. Today, you will find out Tesla's plans for 2023, according to Cathie Wood. Cathie Wood's bullishness on Tesla is nothing new. Wood, who manages ARK Invest funds such as ARK Innovation ETF, has Tesla among her top holdings. Terms such as disruptive innovator and convergence always seem to pop up when discussing the investing rationale behind Cathie Wood's hugely successful ARK Invest asset management fund, and these terms are arguably related to Tesla. In fact, Cathie Wood-led ARK Invest has a lot of faith in Elon Musk's Tesla venture, so much so that the stock represents a whole 10% of the fund's capitalization, which is not much of a surprise. Tesla ticks a lot of the boxes when it comes to Cathie Wood's investment philosophy. Indeed, it was Cathie's intervention by way of an open letter to Elon Musk back in 2018 that prevented Musk from reacquiring Tesla stock allocation and taking the company private again. The letter turned out to be a phenomenon of sorts. In it, Cathie Wood outlined a 5-year bull thesis for Tesla stock, pitching its price in 2023 as high as $4,000. Musk at the time was happy to pay just $420 for every share in his nascent stock repurchase scheme. If you look at the revenue growth, the last 5 years, it's compounded at roughly 48% per year, and that was, as you recall, when Tesla was experiencing quite a bit of controversy. Our forecast for the next 10 years is in the 50 to 60% range, depends if you take our bull or our bear case, and there's a few reasons, says Cathie Wood. According to Wood, there are 4 barriers to entry that seem to have gotten higher in Tesla's favor. The first is battery technology. Wood said that Tesla is the only car manufacturer, except for a few in China, that decided to ride down the cost curve of the consumer electronics industry. This is due to the change in batteries that are used in laptops and/or cell phones. Wood noted that when Tesla decided to do that, auto manufacturers and auto analysts laughed at the company since there were publicized battery blow-ups on airplanes, which resulted in a ban on that kind of battery. Because of that, though, its cost is lower. Today, the cost of its battery pack system is significantly lower than that of other auto manufacturers. Wood said that if they want to compete with Tesla, those other automakers are going to lose money in electric vehicles while their gas-powered vehicles will fail. The alternative will be less power or less range, so that we're seeing a lot of permutations around that. So battery still 3 to 4 years ahead in terms of cost declines of other auto manufacturers who decided to use lithium-ion pouch technology as opposed to the cylindrical batteries that Tesla uses, says Wood. The second barrier to entry, according to Wood, is Tesla's own chip, which is the most critical from a valuation and growth point of view. Tesla is the only auto manufacturer to have designed its own chip. Wood said, the others didn't follow. They didn't have their own chip. They didn't have the vision. Wood said that Tesla is taking a leaf from Apple's book. She said, if you remember in the day, Apple was the upstart. Nokia, Motorola, and Ericsson were the winners in the cell phone space. She explained that Tesla was the upstart where its founder Steve Jobs thought that it was not going to be just a phone, but will become a computer in the pocket, so to speak. And he did just that. I'll never forget the delight I felt when I was able to access the internet on my phone. I just thought this was revolutionary, says Wood. She believes that Tesla, like Apple, has started and is starting something revolutionary. Wood said that the reason why Tesla is so far ahead of its competitors is that those companies have just gotten started. She said that what they have delivered so far are cars that don't even meet the range or other metrics of Tesla's Model S. The other barrier to entry is the artificial intelligence chip, which is all about autonomous, and Tesla is the only one doing this. Wood said that when their analyst James Wang, who worked at NVIDIA, an artificial intelligence company, for 8 years, looked at the specs of Tesla's chip, he was in awe. Wang said that Tesla is 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. This is important in going autonomous with electric, which is Tesla's goal. Going autonomous has everything to do with artificial intelligence projects, and the winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, only has 20 million. Finally, Tesla's advantage over other companies is that it is the only auto manufacturer still that delivers over-the-air software updates to modify performance. How do you expect Tesla stock to perform in the coming months and years? Share your thoughts in the comment section below. The next barrier to entry is that Tesla has billions upon billions of miles of real-world driving data accumulated. According to Tesla's then AI director Andrej Karpathy, they have more corner cases to train their systems on than any other company. Wood said that it is not going to be possible for other rival companies to catch up because Tesla already has more than 1 million robots, including her Model 3, roaming around collecting data and sending it back every day. Another barrier to entry, according to Cathie Wood, is over-the-air software updates, which apparently come as a surprise for her. Wood shared that she got her Model 3 in 2018 and that she had never had to take it in for a problem. Tesla apparently has diagnosed any problems I've had and corrected them before I see them or experience them. The only problem I've had is a nail in a tire, and of course software could not correct that, but that was it, says Wood. Those are the barriers to entry that gave Tesla the lead. According to Wood, their base case is $3,000 in 5 years from around $800 today. Our confidence in that has grown because what we're seeing now is Tesla able to scale EV manufacturing in a way that no one else, except perhaps BYD in China, no one else is doing this yet, and Tesla had to go through a huge learning curve to get there, says Wood. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. This is not like the manufacturing of traditional autos. It's a completely different game. We used to say we thought Tesla would take 25% of the electric vehicle market in 5 years. Now, we're saying we believe Tesla will take 25% of the total vehicle market in 5 years, and we think electric will be nearly half of total vehicles sold." Some investing enthusiasts have been wondering what ARK Invest analysts see in Tesla that warranted such optimism in the company's potential. For one, Wood famously declared the firm to be a value stock, and it was obvious that there was no sarcasm or even braggadocio to this claim, as the star investor was being quite serious. Moreover, this analysis can be explained through the fund's concept of convergence. Tesla isn't just a straight-up EV play, it's a company that melds or converges multiple technology sectors and platforms into one entity. It's a robotics company, it's an energy storage specialist, it's an artificial intelligence software developer, it even has its own glass technology group. And this plurality is what gives it its deep value and its exalted position in the market. Furthermore, Tesla is a disruptor in the transportation space. Again, this is straight out of Cathie Wood's playbook. ARK seeks out innovators and those changing the landscape in their respective fields. Tesla might not be the only EV firm in town. In fact, there is a lot of competition from seemingly everywhere, but it is the only one leading the pack and the one dictating the pace for its rivals in the race. Visit Tesla stock and watch our other videos for more of this content.